Welcome to another episode of the CPA Advisory Show. I am your host, Jeremy Wells, and with me is my co-host, Chris Hervishon. Hey, Chris, how you doing?
Doing great, Jeremy. How are you?
I am doing well. We've got what I think is an interesting topic for this episode, but before we get there, you've got some good news to share with us, right?
I've got lots of great news. For starters, we're recording this in the afternoon, and I am fully caffeinated, so usually you don't get a fully caffeinated version of me. But beside that, we got another review, which is great. It's from the Lean CFO. It was posted on August 25th. Lean CFO is Paul Seaton on Twitter. He's a great follow, so you should definitely do that. But here's what he says. Content that is engaging and actionable. Actionable is in all quotes, Jeremy. You'll be happy to know that. And it says the CPA Advisory Show is the, also all capitals there, the go-to podcast for how to modernize and implement best practices in your firm's day-to-day operations and deliver a world-class experience to clients. Jeremy and Chris bring on smart, entertaining guests each week and are very thoughtful in the questions they ask. They do a great job of teasing out the best tactics and insights their guests have to share. I listen to this podcast weekly and I've found actionable value in each episode thus far. Keep the quality content coming. And we don't have a guest this week, so I guess it's a little bit weird, but it's okay.
I was just thinking that. I was thinking, how do we pivot from there? If you want to be a guest, or if you have a good idea for somebody that you would like to be a guest, please get in touch with us and let us know. We are always happy to bring on guests on our show. But yeah, I really appreciate that review. Actionable is not only the big bold all caps word there, but I think that's an important word.
For sure.
A lot of podcasts can be just 30, 45, 60 minutes of just talking about something, but definitely want to give our listeners something to walk away with that they can use to implement in their own business or in their own practice to make things a little better for themselves and their clients.
Yep. And that pivot was a 10 out of 10. It's almost like you've done that before. All right. So what are we talking about today? We're talking about month-end close.
Speaking of pivots.
Yeah. Speaking of pivots, we're pivoting again. Month-end close. Month-end close as it pertains to CAS. So, Jeremy, what does that mean? How do you guys do it?
Yeah.
What's the deal?
Yeah. So I think to answer that question well, I got to take a step back and look at the overall sort of structure of my firm. So the majority, first of all, I keep a relatively small client roster, and the majority of those clients, we do bookkeeping as well as payroll, if necessary, in-house for them, for those clients. So predominantly working with small businesses and doing the books and payroll. So the month-end close is an important part of the day-to-day, week-to-week, month-to-month operations in my firm. One, because we want to try to keep our clients up to date on what's going on in their businesses from a financial perspective, beyond just the balance in their bank account at any given time, but then also thinking about the lead up to the tax return, right? And so, especially when we're dealing with businesses that are going to have to file their own entity returns. So especially for the S corporations and the partnerships, we just want to make that process as quick and seamless and worry-free as possible. So my perspective is the better job we're doing closing out each month, the less work we have to do for a year-end review and then for tax prep as well. So right. I put a lot of emphasis on the month-end close and trying to get that done well.
Okay, so let's back up a second. So maybe and we're seeing this a lot in the profession, right? There are folks who are coming out of tax and they're upselling their client roster into CAS. So if you're doing that, maybe you haven't spent time in a corporate accounting or finance function. Maybe you haven't done bookkeeping before. What is the month-end close and why is it important?
Yeah. That's a good question. So I just kind of make it up, and because I didn't have the big accounting background, so nobody really taught me what a month-end close was, what it was supposed to look like, what adjusting entries were, and what the perfect management report to send for the financial statements and all that is. I just made it up, right? But it goes back. Yeah, I mean, I'm proud to admit, right? It goes back to our running theme here on this show is just being helpful, and so I just when I started signing up bookkeeping clients, which was not long after I started my firm, which was not long after I decided I wanted to be an accountant, right? Um, the only thing I really had to go on was the handful of other firm owners that I was networking with at the time, which the main one there was my mentor, who actually did not do bookkeeping within his firm. His wife runs a bookkeeping firm, and so I got a little bit of help from her as far as what she was doing with her clients. But as far as I was concerned, I just wanted to try to be helpful to my clients, right, and try to stay on top of what they were looking for, what they needed, what they wanted. Now, I got kind of lucky, and a lot of those first clients they didn't really know either, right? They were a lot of independent contractors, so your real estate agents and your software programmers and developers, and these types that some of them maybe even could have been employees, but they were paid as independent contractors, and so they were getting paid enough to where an S corp made sense. So I wanted to set up books. I wanted to do the right thing, get them set up like a legitimate business, and so the month end close for those clients was more of in part it was a formality, right? Because I was trying to encourage them to think like business owners, right? And business owners need to stay on top of how their businesses are doing, right? And so they need those monthly financial statements. They need, to track the progress of their business, those kinds of things. But the other side of it was, like I said, I just wanted to try to make things as simple as possible on me come tax time. And I knew that doing a better job month to month throughout the year was going to help with that. A third thing is because all of my bookkeeping clients are also tax clients, I wanted to be able to recommend estimated payments to them. And so the better of a job that I was doing throughout the year of tracking the profitability of their businesses, the easier it would be to turn around and run tax projections based off of those numbers. And so, it really started off as more of like an internal function to facilitate the tax work that I was doing. I would say in the last couple of years, though, I've gotten more clients that are actually more interested in seeing those monthly or even quarterly financial reports so that they can start thinking about, is the business as profitable as they want? Are the margins where they want? And, when do they start hiring? Do they have the financial capacity to start hiring? These kinds of questions that actual businesses are, business owners are asking. And so throughout that process, I had clients where I could wait, 3, 6 months before I needed to update their financials because I would get busy during tax season. So I didn't get around to it till summer or whatever. Now, a lot of my clients, I can't do that. They want those financial statements in March just as much as they want them in October. And so I can't, put off the bookkeeping for 6 months like I could have with some of those first clients.
Okay, so the deliverable, the end of the month end close process is the financial statements, or are the financial statements. And the importance of that to the client, that gets back to the being helpful thing, is so that they have an idea of how to manage their business. They can
Yeah.
take this information and they can make some sort of an actionable decision based on that information. Is that fair?
For example, I have a partnership. It's 3 guys. They're fairly young. They know that there's cash in the bank for the business, but they don't, and they know it's more than the business needs.
Mm-hmm.
So they're wondering every month, okay, how much should we pay ourselves, right? And so when I close out the month and I go back and I look at the P&L, I look at the cash balance from the balance sheet, I look at how much they've distributed to themselves so far that year. It's really easy to turn around and say, okay, based on your ownership percentages, I'll break this down and I'm going to recommend within some range you distribute this much to the 3 of yourselves. And they'll come back and they'll say thank you. And then, a few days later, I'll see the transaction in QBO where they distributed cash out to themselves, right? So, that's a business decision that partnership is making as far as, how much to reward themselves for running a profitable business. It's things like that, if I were only worried about the tax return and I was only talking to them once a year, they'd be on their own or they'd be going to someone else for advice on those kinds of decisions. But I'd rather them be coming to me.
Okay, so they're making these decisions based on the financial information that you're giving them. And we know that the financial information is right because you're doing it, right? But what if the financial information is wrong? Then what is the downstream impact of that? So I would posit that the month end close is really all about making sure that those financial statements are correct. And what that means is all of the transactions that should be in the financial statements are in the financial statements or rolling up to the financial statements. So everything's in the GL. All of the transactions that shouldn't be in there. Like, duplicates, things like that should not be in there. And then layering on some sort of a reconciliation process, a substantiation process, those are different things, and then some sort of a quality control process. So all of those things, making sure that everything that should be in there is in there, making sure that everything's reconciled, making sure that everything's substantiated, making sure that we have a quality control process to make sure that things are correct and things are classified in the right way. I would consider that to be the month end close process. And then that leads into the financial statements, which at that point is basically a fait accompli, and it's fairly easy to just crank something out, give it to a client, and then you can have a conversation based on that and interpret it. So the value really is on the interpretation and helping that client. That gets into the advisory piece, but we can only do that if the information is good. And what's really interesting, Jeremy, I think, is we've come at this from two different spots. I came at this from the accounting world, and that's where I live with month end close and things like that. And then I got into the tax, and it's interesting. You're like, oh, I just made up the month end close. Well, I just made up the tax return process because, I could do a tax return, but building out that whole process, like I didn't know. I never worked in a firm that where we were cranking out hundreds of tax returns in a tax season and seeing that process and how that works. So I made it up, right? And it's evolved over the last dozen years I've been doing it or so. And it seems like you've had kind of the opposite experience where you came at it from the tax piece and then merged into the accounting piece and kind of same but backwards, right?
I think you itch the scratch, or you scratch the itch that
Or itch to
that you've
scratch,
got,
whatever.
right? Like, yeah, like and like I said, a lot of my earlier clients, they just didn't care about those regular financial reports, but they did care about the tax return being right, and I cared about the tax return being right. And so, I try to encourage them to be better business owners, right? And obviously that, I want them to be profitable, I want them to make money. But yeah, I think, it all depends on what the focus of your practice is, what the focus of your firm is, right? I'm also working with a lot of clients that, they're holding things close to the chest. And so they're probably going to be, like I said, in that freelancer, solopreneur, knowledge worker kind of space for, the foreseeable future. I do have some clients that are building out agencies or brokerages or firms of their own, but I do have a lot of clients that, they just see themselves as independent workers. And the fact that they need bookkeeping, the fact that they need payroll, the fact that they need a separate tax return for the business, it's just a formality. It's an administrative burden to them that the only reason they're going through all of that is because, I keep reminding them that, trust me, there's some tax savings here and it pays for itself. Okay.
Mm-hmm.
So, just go along with me on this. If it weren't for that, like if S Corps just went away, if we woke up tomorrow and Congress had passed a law and the president signed it saying S Corps don't exist anymore, a lot of that would just go away, right? Pretty soon they would just all be Schedule C's. They wouldn't care about bookkeeping. They just use their bank statements at the end of the year. So, I don't use that as an excuse not to do it. Instead, I use the excuse of, well, in order to be compliant on the tax side, we're setting up the formalities of the business. Why don't you just go ahead and act like a real business owner, right? Let's get you used to reading financials. Let's get you used
Imagine
to
that.
getting a monthly financial statement.
Yeah, imagine that. Right? I mean, so kind of talk me through like what's your close process look like? Take us through soup to nuts.
Yeah, so I keep it simple. I think a little while back, maybe 1 or 2 years ago, QuickBooks Online, which I use QuickBooks Online for all of my clients' bookkeeping, they rolled out a new feature on the accounting side called Books Review, and within that is a monthly review procedure. And I found that about 95% of that is sufficient for what we're doing and helpful for our clients. So it's a 4-step process, and each one of those steps has a list of things that are associated with what's going on in the books, what's going on in the GL, what's going to show up on the financial statements, things to run through. And so the first one is the transaction review, making sure that we've got everything categorized, that we don't have anything that's missing payees or anything left in uncategorized accounts, those kinds of things. Also, those annoying things that, and this gets back to the tax return, right? I would always get annoyed when, I would do a tax return working for another firm or working with another firm, and you open up the books to go do a 1065 and 1120s, and you're sitting there and there's $20,000 in undeposited funds. Well, what the heck is that, right? Or you're looking through office expense and it's twice as much as last year, and none of the transactions have any payees, and you can't tell if any of this truly is office expense or not, right? And so is this really office expense? Is this cash that went to the owner because it's big even amounts? Like, I don't know, right? And so we go through these kinds of steps to make sure at the transaction level we're getting things right. The way you said, the point, one of the big points of the month end close is to make sure that what winds up on those financial statements, and for most of our clients, the real important thing to them, the tax return, is actually correct. And if we're doing that at a transaction level throughout the month, then it's a lot easier to do it that way than trying to do it for a year's worth of general ledger stuff at come tax time, when we've got to do it for all the clients, right? So that's the first step. The second step is the reconciliations, the account reconciliations. And so within the monthly review in QBO, you of course have your assets listed, especially your cash accounts, right? That you get the bank statements to reconcile, but you can add any or take away any balance sheet accounts to the list of accounts that you want to reconcile inside of QBO. And we just use the bank reconciliation feature within there. And so we make sure, of course, that all the cash accounts are reconciled. If there are any loans, we keep those reconciled, make sure we've got the correct amount for interest expense versus principal. And if there are partners or other shareholders, we also reconcile those to make sure, and we'll check in every few months, especially if those shareholders or partners are also individual clients. We'll check in with them every few months to make sure that we're in agreement, right? So to make sure that we didn't miss any payments, or we didn't accidentally misallocate some payments to partners or shareholders. Again, this just helps, when we get to time for the tax return, so that nobody's getting a K1 that doesn't make sense to them. The other thing is, we've got a few clients that have multiple entities that have joint ownership, or they have, one entity owns part of another one. And so we'll reconcile the equity accounts for those balances on the balance sheets of both companies, and we'll reconcile those.
Okay, so big question: are you reconciling the full balance sheet, and where do you stand on that?
We're not reconciling the full balance sheet, but keep in mind that for a lot of these clients, there's not a whole lot besides the cash accounts, right? It's cash,
credit cards.
There might be a credit card, right? Or two, or three. And then what's left, right? It's net equity. And so, net assets equals equity. So it's relatively easy to go through and say, okay, if we've got the cash bank accounts reconciled, we've got the credit cards reconciled, maybe there's a loan on the books, probably not. A lot of these clients, they're not carrying long-term debt. A lot of these clients, they don't have long-term fixed assets. If they do, it's probably something that we bonus depreciated out on the first tax return that it was added to, and so there's really no need to go in and reevaluate the depreciation on any of those things. So part of it is the way I structured my firm and the kind of client we're going after, right? Is it makes part of that work simplified. But if there's something on there that is going to have more than a handful of transactions a year, like I say, those equity accounts in other companies, or those loan balances, or multiple partners that are getting differential distributions throughout the year, we want to make sure we stay on top of those things.
For sure. All right, so that's the second step. What's the third step?
The third step is the final review. And so this is where, we've made sure all the transactions are right. We've made sure everything's reconciled. And then we actually go through the AR and AP, if the business has any of that, if they're doing any invoicing or any bill pay through QBO, make sure everything's clean there. And then the reports. And I actually have, so these first three steps so far, the transaction review, the account reconciliation, the final review, I have the accountant, the staff accountant in the firm doing those first three steps. And so the end of that third step is to actually look through the balance sheet, the P&L for that period, for that month, and then the general ledger for that month. I want that to be the last step, just another review, as if you were the client, right? Go through here
Mm-hmm.
and look through the P&L, through the balance sheet, make sure everything makes sense. Look through the GL, make sure everything looks good there. And then the final step, the fourth step, is what they call the wrap up. And this is where I go in, I pull up the management report, the monthly management report, which I've actually got templated, and we use the same template for all the clients, at least at the base. If there are some extra reports that they request from us, we can add those into their template, but we use the same template for all the clients. Balance sheet, P&L, statement of cash flows. And then I will look through that report myself, scan through it, make sure, again, everything looks good. And then we send that to the client and we close the books for that month.
Very cool.
Yeah.
So you're using the reporting module inside of QuickBooks to send those reports to basically email, right?
Yeah, and I've got a text snippet. If you use Text Expander or Alfred
Mm-hmm.
or one of these programs where you can put in snippets with a short keyboard code. I have one that will change the default text in that email that QuickBooks will send with a PDF copy of the reports. I'll go through and I'll change that into our custom language, and part of that includes a link to schedule a call with me. So I make it very clear, and I send that to, if it's a partnership or an S corp with multiple owners, it'll go to all of the owners, and I make it clear to them that, look, this is the financial report. It's accounting language. That's fine if you don't want to look through it, or if you look through it and it doesn't make sense. If you've got questions, let me know. Right. I want to make sure that they don't think that, just the deliverable is what matters. That,
Right.
yeah.
Very cool.
Yep. So that's pretty much the month end close process, and I've got it to where I've got a staff accountant who feels pretty comfortable doing that, and I'm of course reviewing his work. Now the other part of that, I mentioned the uncategorized part. The other sort of function that's not within QBO is uncat or uncategorized expense that we're using, and so that's what we get help from the client on with those uncategorized things, or built into that monthly review, there are client requests where QuickBooks will send a notification to the client saying we need something. So if it's a bank statement we don't have access to, something like a Capital One, credit card that we can't get our own login or something like that, then we'll ask them to upload that for us. But for the most part, it's a pretty self-contained process. And then we use Carbon for the actual practice manager. So those 4 steps I've got as the 4 steps in the recurring monthly work for every bookkeeping client. And so the staff accountant will do the monthly review there in QBO. He'll check those tasks off in Carbon. I'll know that it's time for me to go in and wrap things up. And that's our monthly review process.
How about as far as timing? Like, when does this work start during the month, and when is it done?
Yeah, that's a good question, because once you get beyond a handful of clients, you start to notice that your clients kind of select themselves into different buckets. And I found that the best way to split them up in order to be able to manage and prioritize the clients that we're working on was in terms of how much those clients are interested in seeing those financials, and they're actually making decisions based on those financials. So like I mentioned, the client, that they actually decide how much to distribute to each partner based on what they're seeing in the financials. So they want theirs as soon as possible because that's how they pay themselves, right? So I divided the bookkeeping client list up into 3 different tiers: tier 1, tier 2, tier 3. And it's not exactly even, but tier 1 is those first priority clients. Let's try to get them done within the first week or so, after the end of the month. If we can get all of those tier 1 clients, or at least, all but 1 or 2 of them because of some weird issues, if we can get those done within the first week or so, and then tier 2 and tier 3 will come after that. Yeah. And so for tier 1, really try to get them done within the first week or so. Tier 2, I like to get them out by around the 15th. Tier 3, is really the clients that they would never ask for a financial report, even if I offered it to them, but I still want to send it to them. and so we try to get them done by at least by the end of the month.
Okay, so where do you want to take it from here?
So That's all my month end process. Why don't you tell us about yours?
Okay. So we're a little bit similar as far as a from a timing perspective. We've iterated a number of different versions of this. We've always been subscription based pricing. We've always been one monthly fee, and we've always had three separate tiers. Where we first started was we had a tier that was quarterly. We had two tiers that were monthly. Uh, and the quarterly clients, we would do that on a quarterly basis. The monthly clients, we do that on a monthly basis. We've basically totally gotten away from that. For the most part, we don't really work with quarterly clients anymore. And even if we do, we're doing what we call a transaction classification on a weekly basis. We moved every client, regardless of what tier they're in, to a weekly accounting cadence. It's not full boat accounting every single week, but we're going into basically what it means is we're going into the bank feed and we're doing all the transactions every single week. The reason why we did it that way is number one, to alleviate a lot of workflow compression that we were experiencing in the first week of the month, because our SLA to our clients will be done by the 10th. So we had a lot of workflow compression and then a lot of just downtime and usually the second half of the month. So that helped to alleviate some of that just by moving to weekly. That was the first reason. The second reason is because it creates the potential for more touch points with a client, which we view as a good thing. So in other words, we're looking at your bank feed on a Wednesday and we see some transactions that are a little bit weird that we don't recognize. We can reach out and say, hey, what's going on here? We noticed this. And then it just kind of goes from there. So it creates an additional touch point, which I think is a good thing. So we classify all the transactions in the bank feed. So that's your credit card and checking accounts, savings accounts, whatever's connected there. We're a QuickBooks Online only firm, so this really obviously pertains only to QuickBooks. But then we do that throughout the course of the month. We use UnCAD as well. Those transactions get updated on some sort of a cadence by the client. It just kind of depends. It's not really an issue until we get to the end of the month, right? Anyway. But once we do get to the end of the month, at that point, we are going to be posting accruals if we have a client that's on an accrual basis, posting revenue accruals, posting expense accruals, making sure that those are done. Once that is done, we're going to get into the reconciliation. Historically, and this is part of the reason why I asked the question, like, do you reconcile the entire balance sheet? Historically, what we've been worried about on a monthly basis is reconciling bank and credit card and loans, if there are any. Basically, we're going to get to the point where we're going to reconcile everything that's on the balance sheet, anything else that's left over, and being a little bit more strict about that and being a little bit more strict about substantiation. We've moved up market a little bit in the last year or two. So we've got clients who have a little bit more complex balance sheet than what we've had historically. So that substantiation piece is becoming a lot more important. So that takes us basically to day 5, day 6-ish, somewhere in there. And then at that point, we're starting the review, and a CFO on our team, it's either going to be myself or Alex. I'm going to go in there and we're going to do a full check. And we've got a workflow solution that we use, which is Zendesk. So we operate a lot like a help desk does, like an IT help desk. And inside of Zendesk, we have tickets, and we have a ticket every single month that generates for a financial review. Inside of that ticket, we've got a checklist. Checklist is maybe like 40 different points, something like that at this point. And it basically just goes through the whole list. Like, here's the thing to look for. Here's another thing to look for. Provide comments, provide screenshots. And then by the time that we've gone through that entire checklist, we should have really clean financials. It should be well documented. Maybe it needs to get punted back to staff. Maybe it doesn't. Maybe it's just good to go. And at that point, we're basically done. So it's a little bit of a continuous close with some checking on the back end. And then layered on top of all of that, we've got some quality control bots. So basically just bots that I've built out in Integromat that go in on some sort of a cadence when it's about half built out at this point. So we've got, 15, 16 different bots that are operable for a select number of clients. And we've gone through numbers of iterations of bots that we have used to check the quality of our financials and our accounting processes in the last couple of years. This is our newest iteration, and hopefully the last one, but we'll see. But they go in on some sort of a cadence and just check various different things. And when that's all built out, that's going to be about 33 or 34 different checkpoints that we're going to have on a continuous basis throughout the course of the month. So for the most part, by the time that we get to the end of the month, most of that quality control checking, controller level type work is going to be done. And at that point, it's just reconciliation, substantiation, doing a quick once over, and we should be able to flip financials around fairly quickly. The reason why that is important is so that we can have conversations with clients, those advisory type conversation with the clients earlier in the month, so that information is fresher than, if we're waiting 1 month, 2 month, 2 months, weeks, and the information isn't even pertinent at this point, right? So that's kind of what our process looks like.
Okay, you got to give an example of some of this quality control work that your bots are doing. So if you're going to build 33 or 34 of these out, tell me what, one or two of these bots is doing that could be done by a computer and not by a human person.
Yeah, and there's a lot of them, and it's fairly robust, and we're building it out simplest to most complicated. The most complicated are going to be basically looping through bank rules and making sure that the bank rules are the way that we want them to be. Um, and we probably don't even need to get into that. We're going to get into that on a different show. But so examples of bots. Did your client go in there yesterday into QBO and create a new chart of account, a new account?
That's
So
a
we'll,
Yeah,
yeah,
that's an
it'll go in
interesting
there,
one.
it'll flag it, and they'll say, hey, this account was created yesterday. It was created by so and so, and you either need to substantiate this or provide a description. Like, how in QuickBooks you can go into the chart of accounts and you can provide a description of what the account is. And we've got different parameters that we want around that. It'll go in and it'll say, like, go and do that for a new account that got created. We want to, what we don't want are clients going rogue and basically just creating all sorts of accounts and classifying things. Like, not good. Nothing good comes from that. Bad situation, right? We've all had that. Same thing with classes.
That's something that it would be nice if that were just automated within the system. Like if I woke up and got an
Yeah.
email and saying, "Hey, one of your clients added a added a new category last night."
Hmm.
Like that would be nice to know.
Yeah, for sure. Same thing with classes. We've got one for that. One of my favorites is vendors that use multiple GL accounts. So this could be indicative of the fact that we just have inconsistent classification. It could be just a false positive. So we have an exception list that we're going to be building out over time. Like, for instance, Amex. We've got this one client. I just talked about this with a team member before I started recording the show, but Amex that should go to bank charges and fees, so that the month or the yearly fee. We have interest expense that goes to interest, and then there was one other account that I might utilize for another reason, which skips my mind right now. But there was three different accounts that it should appropriately go to. So we create an exception that says this vendor can use three different accounts, and if you see four over the last year, then it'll flag it as a potential problem. So that's another one. Non-current vendors, making those inactive. Non-current customers, making those inactive. Expenses that don't have a vendor, like, yeah, you can go run a report for that, but this will flag it on the front end. Payments that come in before an invoice, so misapplied payments, there's a couple of checks for that. So stuff like that, things where it's just a whole bunch of humans touching things, or maybe it's a bank rule that just has gone rogue and wasn't set up correctly on the front end. And maybe these things won't get caught by a human review because, like, look, humans aren't perfect, and going in and review by the time it gets to a human level deep dive review, like, we're probably not going to go in and look at every transaction, right? And maybe we don't even have the capacity to do that. So the bots are really meant to go in and do these things in an automated way, in a way that's perfectly consistent, and that maybe it's just a notch up from what a human would be able to do, or should be expected to do, really.
Very cool. All right, I've got a few during this discussion. I've got a few questions that I just want to get your quick take on how you handle these situations, because they're things that I've had to try to figure out a solution for in my own month end close process, and I'm always open to new ideas. But
Let's do it.
okay, so a couple of quick hits here. So one, uh, month end close when a bank feed is broken. You brought up Amex. Amex is notorious for the bank feed breaking inside of QBO. So will you call that month end close done if you know the bank feed is broken, or are you going to wait until that gets fixed, and maybe that's a day, a week, a month? Like, what do you do there?
Yeah, so generally it's going to be client dependent, like everything else. It depends. So generally we'll wait for the client to go in and reconnect it. That would be like step one. If we know that we've got a client who's generally not responsive, who's going to take a little bit, or super busy, is going to take a little bit of time. Option two would be to go into Ledger Sync, and we utilize Ledger Sync to go and fetch bank statements, and they'll also fetch transactions. Option two would be to go in there, get the transactions, load them to QBO ourselves, and go about it that way. And maybe we can reconcile, maybe we can't, but we would want to do some sort of a fail safe where we're not reaching out to the client first and not making it an urgent thing for them. We can just reach out through the course of the month, like, hey, by the way, bank feed's still broken. Please go in and fix it, and do it in a way that's maybe not like, oh, hey, putting a gun to their head and saying, oh, by the way, we can't close the books, which may or may not be important to them anyway. It's important to us because we're accountants, but just making it a little bit more friendly interaction.
Got it. Yeah, I think I'm pretty similar there. And you mentioned Ledger Sync, so yeah, are you using Ledger Sync for all the bank statements, or just the ones you can't get through QBO? Or now that they've introduced that, what, like a year ago, or how are you using Ledger Sync there?
Yeah, we're using them for all of it. And part of the reason is just because I'm loyal to LedgerSync. I just really like working with them. That's
Yeah, I do
part of it.
too.
The other part of it is we have found it to be like the QBO integration to be very inconsistent as far as what it will fetch and what it won't fetch. Even in my own firm books, I'm using a bank that supposedly that never has a connection problem ever, allegedly, and still I've got five accounts at that bank. One statement will pull this month and it won't pull next month, and one statement won't pull this month, and it's not nearly as
Mhm.
robust and not nearly as reliable as LedgerSync. I found. Would it be great if I didn't have to pay for LedgerSync and if everything got in the QBO? Yeah, sure, but when is that day going to be? I mean, who knows?
And I think Ledger Sync still just has more banks, right,
Oh yeah,
than
for sure.
QBO does for sure. So yeah,
Yeah,
okay.
and like not to be an infomercial for LedgerSync, but it seems to me like they're starting to iterate toward more automation that's not just about statements, and that's going to be an interesting service regardless of whether or not QBO is able to reliably pull bank statements in the future. That's my take. And bank statements is a huge thing. If you ask
Yeah.
my team and you said, "Hey, what's the biggest impediment to doing your job and doing it well on a day-to-day basis," all of them would say access to bank statements
Oh
or
yeah.
access to check deposits. So it's such a huge problem.
And 4 years ago, when I first really started bookkeeping, HubDoc was
Mm-hmm.
fantastic, right? HubDoc would pull those statements, and they would pull stuff that wasn't just bank statements, right? I remember for one of my first clients that was already running his own payroll through ADP, HubDoc, you could connect it to ADP, and it would pull in the payroll journals into HubDoc, and I didn't have to go hunt that stuff down through ADP, and I thought that was
Yep.
fantastic. So yeah, I think Ledger Sync is a great product, and they've still got a little bit of work to do. They've still got more things that they can pull in. And then on the flip side of that, HubDoc, unfortunately, just kind of really fell off, especially after the
Yeah.
acquisition. But
Bummer.
that's what happens.
Right.
Tools come and go.
Yep.
Okay, so on the notion of bank reconciliations, credit cards that don't have a calendar month period, right? So we run into this. Like a client has a credit card that runs from the 15th
Mm-hmm.
through the 14th. And so we're sitting there on the first trying to get the month end close, and we're missing 2 weeks of the reconciliation for that credit card. Do we wait until the credit card statement comes out, but now we're doing the month end close 2 weeks after the end of the month? Or do we just go ahead and send it off and hope that those last 2 months of the credit card are right?
It's such a good question. It's so interesting. It's like one of these deep philosophical accounting questions, I guess.
I
Yeah.
know, right? My staff and I, we spent like 2 weeks like debating this
Yeah.
back and forth, like what we should do
And
on
it's the
this
craziest
situation.
thing, right? So I think that there's a couple ways to handle this. And I think one of the ways that we're contemplating handling this is just going and fetching the balance from somewhere as of the last day of the month, and then closing every account based on whatever that is, and then kind of doing the bank reconciliations. Not, I mean, I guess you would say separately at that point on whatever cadence the bank statements come out. I think that that's one approach. I think it's interesting. For what we do, like we're not super militant about, oh, well, we definitely need a balance as of the first or whatever, and we go on the cadence of whatever the bank statement is. Now, all of that within context. right? So if we look at the balance at the end of the month, if we see that all the transactions are cleared out of the bank feed, and if you kind of look up top there on that QBO screen, it says bank balance, QBO balance. And if we know that they're either exactly the same or the difference is explainable and we should be able to figure that out, then I would consider it to be closed, and then we'll just do the reconciliation on the 19th or whatever when the actual statement comes in. But yeah, to your point, it's an interesting philosophical question on whether or not you're truly closed or not, hard closed, soft closed, that that whole thing. And I think that there's ways around it, um, especially now with access to technology like like a plat or something like that, where you can just go pull the balances. But I haven't been willing to invest in that process or that technology to do that in that way at this point. So we just go by the statement dates.
It's funny. You can log into a bank account if you've got access. If the client is giving you access to that, and you can see what the current balance is, and it still doesn't feel like
Yeah.
it's reconciled until I've got that PDF
Yeah.
saying like this is what the month end balance is. Yeah. And then a big one here. So you and I are both using Uncat, but there's a couple other things, options out there that you could use to try to get some clients help on some of those transactions that we just don't know what they are. Of course, just like anything else we send clients, they're liable to, I won't say ignore, but maybe just look over, overlook and just kind of set aside while they're worried about other things. What do you do when a client falls behind on their uncat?
We just bug them. Those are the so there's and those are the same clients who, like, if they're ignoring uncat, they're not just ignoring uncat. They're ignoring their tax return, signing off on their tax return, or they're ignoring meeting with you. They're ignoring meeting requests. And they're not just ignoring NCAT; they're ignoring everything, right? So those clients, like, we just bug them. We've got processes in place where we track the last time we reached out to a client, but you can only do so much. It's that whole lead a horse to water thing. You can only do so much, make it so easy. And if the clients are not willing to engage with you in that process, then I mean that's a problem. And one of the things that, or one of the mantras that we have internally, is we have to have engaged clients, and that's part of the screening process when we're bringing clients on. We have to have engaged clients. When you don't have engaged clients, that creates a headache for everybody in a lot of different ways. How do you guys handle it?
Same thing.
Yeah.
Just bug them a couple times. I think I've got all of our clients in Uncat because you can adjust when the client gets the notification, and so we set everybody up on a Monday, Thursday. And so everybody's getting two notifications a week, one on Monday, one on Thursday, if they've actually got anything in there. Like you said, I've got a handful of clients that either they're behind and they know it and I know it and they told me they'll get around to it. So, I know they're not just completely ignoring it. They just haven't had a chance to yet. And then there are some that, like you said, it's not just uncat, it's also their last tax return that they still haven't
Mm-hmm.
signed, or a document for the tax return that they still haven't gotten to me. And I just ping them, every week for a few weeks, and then every 2 weeks for a couple months, and then just kind of say, look, we're all adults here. When you get it to me, you get it to me. And until then, I've got other stuff to
Yeah,
worry about.
exactly. And to be clear, when I say bug them, what I mean is a different channel, right? So yes, Uncat is sending the notifications,
Yeah.
or our portal is sending the notifications, or whatever. Like, we've got systems in place that will send notifications, but the longer it goes, the more human you have to make it. And a phone call, email, those are a text message if you've got their phone number and the ability to text them. That's what I would do, right? As far as bugging clients.
Yeah, I think there's some other cool looking tools out there that I haven't tried. I've done this a couple different ways. I've kind of built my own process in Project Manager, and then, like I said, I went with what's built into QBO, and I like it to where you can tweak it just enough to customize it for your own firm. But there are a couple other tools out there that are starting to kind of move in on this. Keeper is one that
Mm-hmm.
you and I have talked about and that we've seen out there before, and maybe at some point you and I do a demo or have somebody on the show to explain Keeper to us, because on one hand it looks pretty cool, and then on the other hand I'm still trying to figure out what exactly it does. So
Yeah.
but yeah, I think it's an interesting topic, and I definitely think it's an important part of CAS because, as we've said before, if the financials aren't rock solid, then I don't think you can really consider your advice to be that high quality either. And so the financials have got to come first, and then the advising based on those financials come
100%.
second.
Jeremy, this has been a great conversation on the month end close. Appreciate the conversation. And everybody, thanks for tuning in to another episode of the CPA Advisory Show, and we will catch you next time.
Hey, it's Jeremy. Thanks for watching the CPA Advisory Show here on YouTube. If you enjoyed this episode, please subscribe, like, and leave us a comment. We'll probably read your comment on the air. Be sure to follow us on Twitter at CPA Advisory Show. And if you have an idea for a topic or guest you'd like to see, email us at host@cpaadvisoryshow.com. Thanks for watching, and we'll see you next time.